I tell you that in 10 years, if infrastructure is resolved, if institutions like the courts are resolved, and we can bring in proper foreign direct investment, you would find that the inflation rate comes down naturally. A central bank cannot bring inflation to 5% if infrastructure doesn't allow it. If transport costs are kept high because of the roads and there's no rail. So that is really why we've had inflation of 10% on average in the last, 10, 15 years. And once you are averaging that level of inflation, the central bank is constrained. It can't set interest rates at 5% because then the interest rate is negative and no one is going to lend money. So that's why the challenge so much, right? So that's why I'm a bit sympathetic to the CBN on the high lending rates side, because that is what the current structure of the economy deserves, as difficult
so
as
at every MPC, that paragraph seems to just be photocopied to the next one. The central bank or the Monetary Policy Committee encouraged banks to lend more to the real economy. And each time it gets to that point, and I look at the TV and I look at Godwin Emefiele, and once again I said, that sounds like I heard it the last time. Then the next time I said, that sounds like the last time as well. So what will it take for banks to break this glass ceiling, really? I'm not sure we can wait for 10 years. But in 10 years' time, I want to tell you my age? No. I'm not sure we can wait 10 years.
No, definitely.
To fix infrastructure and get this, because if we leave this little that we have in our manufacturing or industrial, for the next 10 years, I'm not sure there'll be anything left.
I mean, so there are other issues why lending rates are high, and those are areas that the central bank and the legislature can try and fix. So one reason why banks struggle to lend to certain sectors is the issue of collateral, right? Not every SME can provide fixed collateral like land. And given Nigeria's low trust environment, collateral is important for banks. So efforts like passing the law on movable collateral and establishing the registry for that, that is one very quick way of saying, actually now banks, you should be able to lend to these guys because they can provide registered movable collateral, right? That's not a monetary policy initiative, that's a law. And
on the fiscal side?
Well, I guess so. And it's a law that could have been passed, 20 years ago, because there are other challenges with
we're just fixing it a few months ago.
Yeah, this was pushed through by PEBEC, the Ease of Doing Business Committee, because it was an easy win. And I point out that on the World Bank ranking for getting credit, we moved into the top 10 just by passing that law.
A single legislation.
And a second one on credit bureaus, right? The fact that we don't have a national credit rating system, again, is a challenge for retail loans. If I had a credit history dating back to when I turned 16, by the time I walk into the bank at 35, the process of me being assessed for a loan is so much easier. Again, that's not a monetary policy fix per se. It's a mix of the legal and fiscal side, right? So these are ways that we can bring down lending rates without the CBN coming to say, or the policy committee coming to say, oh, we're cutting interest rates, or we're forcing banks to lend 10% of their profits to a certain sector. Because you need to provide banks with the economic incentives. Banks are two things. One, they are profit maximizers. Two, they are not wicked. They have no interest in shortchanging the economy. They simply follow where the money is. And if you set up the incentives to ensure that the money is in retail loans, is in SMEs, they are going to lend to those sectors.
Folks on the street don't believe that banks are not enemies. They believe that banks are just ripping them off. But again, that's a story for another day. And maybe we'll have one of the bankers to have that conversation. But so what do you think should be before the next MPC? We've had the first one in the year behind us. Do you think we're in any position, in any situation, by all the economic parameters, whether it's a PPI or PMI, or whatever it is, to take us to the next, including the current FX reserves, to take us to the next MPC? And what's the outlook?
So I'm a bit worried about that actually, because I look at the end of the year and I'm concerned about a minimum wage hike. I'm concerned about election spending, and I'm concerned about a lot of naira floating around the system. And thinking about
Let me
that,
lay your first. The new minimum wage will be passed, but I'm not sure a single dime will be paid in
until
2018. It's
yeah,
going to be sometime around the election or just after the elections.
or even possibly even later, given the challenges that state governments have been
No.
having
This
with
administration
passing.
ain't going to pay any additional minimum wage or higher minimum wage until the elections are over. But the promises will be made, and papers will be signed, technically speaking. Say, okay, Wi-Fi is going to be 60 or 66, 500,
We'll
whatever
see.
it is.
So we'll see
Yeah,
about
we'll
the
see how
amount.
much that figures. But as far as checks going out, it's not going to happen until maybe this time next year.
I mean, the issue with all the money floating around in the system at the end of the year is it's not conducive for easing. I know that a lot of people are looking at May and saying, okay, this is the time to ease. Inflation is going to hit 12% soon. You need to stimulate the economy just before elections and so on. But I am concerned about the amount of money that may be floating around the economy and the system at the end of the year, and if it's going to tempt the CBN at some point, whether to restrain inflation or to protect the currency, whether it's then going to compel them to think about hiking rates. And that's the sort of policy reversal that we saw late 2015, early 2016, and it does not.
It does not go well. It does not go well. Because if the window is so tight for the central bank right now between May and August to lower rates, and should be looking at how quickly will I be able to hike rates again before the elections or soon after the elections, that looks like a very tightrope for the MPC here.
Yeah, I mean, politically, it's unlikely that they're going to hike before the election. So even if we're in a worst-case scenario where easing accelerates inflation, puts pressure on the currency, they will try and manage the situation until after the election. So the same reason you are convinced that we'll not see the minimum wage payments is the same reason why that is an unlikely scenario.
We don't even have the money. Why are you going to get 66,500 to pay? Excuse me, we don't have the money. We're not even sorting our budget 2018 yet. We're not done with 2017. 2018 is still hanging. But let's leave it there. Let's go having some nice weekend. and then we can come back to all the conversation on Monday with a fresher head. And no, the show is not over yet, is it? No, 2 minutes break. We're taking the last segment of the program. That was from Vetiva Capital Management, the chief economist, Michael Famaroti. I will say thank you to him.